Rick Rule, we both know, has said that eventually these parties that are executing these very complicated hedges in the silver market are going to have a religious experience and they are going to be annihilated. Are we getting to that point now, or is it
Well,
Rick's imagination?
well, yes and no. The the pushback I give is the precious metals investor always thinks they're special.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. And today with us is Axel Merk. Axel, hey, been in this space a long time. You've been pretty much spot on about what was going to happen. Today, it's October 21st, 2025. We're seeing a huge raid. Some might call it a raid. Others would say it's profit taking. Gold is down $213 the ounce. Silver down nearly $3.50 the ounce. What exactly is going on here?
Hey, Kerry, and by the time your listeners are watching this, who knows where we're going to be? It's certainly a very exciting time to talk and to what's going on where we are. I think last time we talked, I may have said that there are different types of players in the precious metals market, and I grouped them into the diversifying investor, into the gold bug, or the person concerned about the purchasing power. You have the central banks, you have the speculator, and the speculator obviously has come in recent months. They were somewhat absent, pursuing meme stocks, cryptocurrency investments, and others, SPAC investments. Central banks have been more active. What's noteworthy about the trend we've had, and I gather you have different guests give different answers, but we have not seen a retail frenzy on the way up. This is notably absent, and also, obviously, as anybody who's followed the market for a while knows, when the price of gold shoots higher, often it's in the context of traditional equities plunging, and that also, there have been some hiccups in the markets, maybe that hasn't happened. But when we talk to coin dealers, for example, they're getting new inventory from retail selling their gold to them. When we talk to wholesalers, they're not selling anything because the coin dealers have enough inventory. So that's not a sign of a retail frenzy. But yes, the speculators are there. What's happening today as we talk, without getting too technical, actually, let me get very technical.
Yeah, we can get technical. We have a technical audience here.
And I know you love conspiracy theories, so let me give you one here. The dealer gamma in the options market is 10 times what it usually is. And so that sounds as fancy as it is. Basically, you have market makers in the options market that are trying to make a living, and they're not speculators, they're balancing their books. And there are situations, and that's what it means when that dealer gamma is high, when anything that happens in the market is exacerbated by the dealers trying to hedge their book. And so when the move goes up, they pile in the upside. When the moves go down, they pile in a downside. And that's a big reason why we've had these major moves down, up, and currently down again. And when that happens, it is really the dealers in the derivatives markets just trying to keep their books in balance. And so that is the noise, the icing on the cake on top of it, so to speak. Obviously, the other reasons why the price of gold has moved higher for quite some time. But in this amazing volatility we're experiencing as we speak, it is the dealers in the options market that are busy.
Okay, so we got a gamma squeeze, I think they call it. And basically, Rick Rule, we both know, has said that eventually these parties that are executing these very complicated hedges in the silver market are going to have a religious experience and they are going to be annihilated. Are we getting to that point now, or is it
Well,
Rick's imagination?
well, yes and no. The the pushback I give is the precious metals investor always thinks they're special. This sort of stuff happens in any market where there's a derivative market. Now, clearly, because there's a physical market, things get more interesting. And so we know that there was a flight of precious metals into the U.S. in the springtime because there was a fear there might be tariffs. There have been stories, not just stories, but London gold was shipped to Switzerland, being refined to the U.S., huge silver shipments to the U.S. Keep in mind that silver has like a fraction of the density of gold and in per value here. And so when you have the same dollar amount of silver shipped, these are big logistical efforts. And so when you talk to the vaults, they are they need to work for the money right now, shipping the stuff around, right? And the gold and the silver coming back into London right now, where historically there's the hub of liquidity. And then, yes, you have, of course, derivatives on top of that that exacerbate some of these moves. But we are seeing some astounding things happening in the markets, but it mostly means that the market is working, because we may not like these derivative players, but they're an integral part of the market. And there is an underlying physical that we sometimes tend to forget. When you see the price of gold quoted, it's that of a London bar in London. And it is noteworthy if the price in the rest of the world is different. That shows logistical squeezes and temporary supply and demand imbalances. But in the environment we're in right now, we've obviously had a tremendous move higher, and currently volatility has shown to be not just on the upside, but also on the downside.
All right. So the volatility. So are we imagining these rates happening? Is the price being manipulated by other players? What exactly is happening here?
Well, the reason you can look at these things from any prism you like. The reason I don't like the conspiracy angle in general, and I know you're in a different camp, but the reason I don't like that is because that assumes that if you only get rid of the bad apples, everything would be dandy. And I'm actually far more pessimistic. I am saying it's the dynamics of the system that drive us into where we are or not. Whether you label these things conspiracies or not is in my view, secondary. To me, it just, no, because the conspiracy angle suggests that it plays into the thing that there's an end game, there's a reset, there is this or that. And my view is there's always a tomorrow. And so society adjusts, the regulators adjust, and by the way, they don't play a fair game. They will change the rules of the game along the way if they don't like what they see. And so we have moved further and further away from a gold standard over the last 100 years. We'll just continue on that path, and it's going to be a choppy road. And yes, we are currently experiencing an interesting episode in that. But keep in mind that we've talked also about the debasement trade, right? If this is the debasement trade, it's the very early innings of that, because we have not seen fundamental stress in many of these markets. Yes, other central banks are diversifying, but those things are happening on the margin, and gold is a disproportionate beneficiary because that market isn't so huge. But it is not as if confidence has been lost in the dollar, because if so, you would see very different reactions in the treasury markets. But what we do see is that when you have, and we've talked about that, when you have tariffs, you're not just throwing a wrench into the flow of goods. You're throwing a wrench into the flow of money, of cash, and that makes the financing of deficits in the U.S. more expensive. That creates more pressure on the Federal Reserve to keep rates low. And so the sort of things we see is kind of a preview of what we might be seeing if or when we see a more disorderly conduct. But for the time being, as volatile as things are, it's actually quite orderly.
And is there a shortage of silver, or is this imaginary wishful thinking, uh, propaganda, manipulation? Call it what you like. Is there really a shortage of
There
physical?
is this magic thing that every gold and silver investor should be aware of. It's called the price. When there is no silver, the price is going to be higher. When, as I mentioned earlier, right, the price you see quoted, let me focus on gold here, is the price of gold of a London bar in London. And
Mhm.
if there were no gold, the price would be infinitely higher if somebody wants to get a bar there. And so it's and you can look at stress into the system if you see a differential pricing in different locations, right? You can see those sort of things. Or you can see shortages if you don't need to call up your vault manager if you don't have a personal vault manager, but you can look at the spreads in the physical ETFs. The market makers are hedging themselves, and if they're unable to hedge themselves, that means there is stress in the market. So even one of the things that happened in the springtime when there was the flight of gold from London to the US, the big bullion banks, they had some of their gold stored with the Bank of England. And the Bank of England is a government bureaucracy with an antiquated storage system. Vaulting gold is actually more complicated than you might imagine. A modern vault has all of a client's vault on a pallet or a series of pallets. What the Bank of England historically does is they have a bunch of gold, and if gold is sold from party A to party B, they enter it in their computer, which means, but they don't move the gold, which means your gold could be spread across tons of different pallets. And so when you need to get gold out in volume quickly, they're just not capable of doing it. And so the vaults in London were concerned that, yes, they have the gold, but they might not be able to get it in time. Now, there was some stress, but the stress never translated into increased spreads in the market. You would have seen it that buying and selling gold costs a very different amount if that stress were to have been realized. And so while it is a real market, and you remember the negative costs in the price of oil when the storage costs were high, right? So this fine print does matter. But yes, there is always at the right price, there is always the metal available. And if in doubt, request delivery, right? And so if you don't think there is the precious metal available, then have it sent to your home and you'll see whether you get it type of thing, right? But that's the sort of thing that can, of course, exacerbate price swings.
So interestingly enough, silver broke that magical $50 resistance point, 50, almost 50 years, 45 years in the making to break that. And if you wanted to get technical, you could say it was a cup with a handle, 50-year pattern. So it was coiled up like a spring. Why was the price of silver, why did it make a new high when every other commodity known to man during that 45-year time span was making new highs? Silver was the only one, Axel, in 45 years never made a new high. Is that conspiracy talk, or is that natural market behavior when sugar, when you name it, everything, wheat, soybean, everything made new highs, but silver.
Yeah. Well, keep in mind that neither silver nor gold actually changes. It's our perception of the metal that changes. It's the price that changes. I sometimes joke that the goal of gold and silver is to cause maximum frustration, with silver being far better at it than gold even. And clearly, we've had some amazing moves in the early 80s, right? And it's taken till now to get to it. The key difference between gold and silver is, of course, that silver has significant industrial use. Indeed, you probably have heard stories that in solar panels, the cost of silver is now one of the biggest components. And so you can have real shortages when everybody is trying to make solar panels and whatnot. It's a why we haven't reached a new high before. it's always fun to play kind of general in hindsight and give arguments to these things. Clearly, we had a short squeeze in the early 80s that was quite phenomenal, right? And because these markets are not as liquid as it appears to be, because they can buy things with a push of a button, you can have outsized moves. That is part of the markets, right? You don't see that in the financial markets as much. Also, increasing quality of grain, the quantity of grain is in many ways much easier than increasing the quantity of silver. The I'm not going to say there was no conspiracy. I'm not going to say there was conspiracy. Clearly, the Hunt brothers had as a goal to corner the market. So there's a conspiracy if you want to have one, right? But I think we're giving both policymakers and the big banks too much credit if one asserts that their goal in life is to manipulate prices. They run a hedge book. They're not in the business of managing price A or B. If you talk to folks at the Federal Reserve, they don't understand gold. Very, very different from 100 years ago. If you talk to CEOs of banks, they don't. Some of them don't know how much gold their own bank holds, right? And I once talked to the head of global commodities of a major international bank. And this was 15 years ago or so. 20 years ago, maybe. No, 15 years ago. He was not aware that they could not deal in physical gold, right? The head of global commodities at a major bank. I'm not going to name them, but that tells you how little they know. This guy knew the derivative market, right? But he wasn't aware that their own bank cannot facilitate physical gold, anything. And then you talk to the folks on the physical side, and they have the physical business, and then of course there's a lot that they provide in services as well. Where they're constrained by what the bank does if they engage in some other activities with some of the gold. But again, they're not in the speculation business, and the big banks, they have as a business a hedging function. And so, yes, that might impact the price of gold or silver. Absolutely, that can happen, but it is not because they are conspiracy theorists. It's just because they're running their business based on their client demand.
Okay, so but these humongous short positions that never seem to go down, and then coincidental markets get slammed right before options expiration. Isn't that indicative of a little game playing there?
Well, of course, it's game playing. But to me, that's not the same as conspiracy theory. So I think we might be just using different words. Yep, there are plenty of speculators there, and as we see, right, and that's why I expanded earlier on the options market, on the dealer gamma. The dealer, they are trying to make a living, right? And so they are incentivized to hedge their book. And yes, it's a quote unquote game. And if you don't know how to play that game, if you are an innocent retail investor that plays that, and I discourage anybody to play these volatile markets and the derivatives markets in particular, they'll get wiped out if they use leverage. They'll lose money. And so in that sense, absolutely, it's a game. But it is not a government orchestrated conspiracy where they're trying to kind of mess with you. It's just that these derivatives markets attract speculators, they attract hedgers, they attract folks doing arbitrage and whatnot. And if you are somebody who just wants to own a coin of gold or silver, you'll look at it and scratch your head. What the heck are these guys doing, right? I mean, as a business, we own physical gold, right? We don't do any derivatives, we don't do any lending and so forth. But I do think it's helpful to understand what's happening in these markets to also try to keep a cool head when the volatility does increase. One of the advantages of a physical coin is that you're not tempted to trade it because you can't just push a button to buy and sell. That that provides the sort of restraint that I think for most investors is helpful. Obviously, if you're a day trader who thinks you can make money on this stuff, be my guest and go for it.
At your own risk. But we've seen JP Morgan, we've seen numerous players in silver get snagged by the regulators, pay huge fines, and promise to never beat their wives again, right?
And they will never do that again. No, if there's money to be made, you'll have some bad apples, of course. I mean, I picked up a copy of Moneyball, Michael Lewis's book.
I know it well.
Yes. Well, do you know what the subtitle is? I don't have it here in front of me right now, but it says something like "How to Win the Unfair Game," right? And so there are players in the market that are trying to game the system, and yes, if they are in a position of power, then clearly they might have a leg up over others. The only reason I'm pushing back against the conspiracy theory is that it's part of life. Get on with it, right? You got to figure out what you want to do with your investments, and if the market doesn't go your way, blaming others for it is not going to help you, right? And that's really part of the reason why I do the pushback. I'm not arguing that there aren't bad players in there. I'm not arguing that some people don't want to do something, but it's especially in the precious metals market, right? There's a lot of constituents that are not for big government. So don't expect government to help you with any of this stuff. That's really my message to that. It's you're on your own and figure out how you want to survive these markets, right? You're in a survival network. So don't count on the government bailing you out. You got to figure out yourself how you're going to deal in this treacherous world. That's really my message in all of this.
I couldn't agree with you more. And conspiracy is it's irrelevant, I think is what you're saying, because it is the way it is.
Yes.
That's the market we're participating in. You're participating in. Everyone is. And whether there's manipulation or not is besides the point, right? Because it's there. It's the backdrop. Yes. There's manipulation in every market. It's just interesting that this market is so emotional, and that people are they get really emotional about metals. Like,
is that because gold is so simple, right? Yet we have. I mean, I think part of it is that gold doesn't have counterparty risk, and so for those reasons, many love it. Except you introduce counterparty risk the moment you touch it, right? Because you risk losing it or whatever it might be. And so that creates this internal tension, and I think is at the core of a lot of the emotion that comes with it.
Yeah. No, I mean, yeah, it's like to cry about conspiracy theories is like crying about the income tax. You know, it's pointless. It gets you nothing. You can observe it, and all of us in our own minds discount what those bad players are doing. By the way, the name of the book was Moneyball, The Art of Winning an Unfair Game. You could call it silver investing. You could call it gold investing. You could just say investing, the art of winning an unfair game, because everything is rigged here. So I think it's more important to know that the rigging's happening, but don't blame it for your eventual gain or loss. Use it to your advantage, right? It's like, right, institutions on Wall Street. They're all about quarterly earnings. They're all about day-to-day trades, trading, short-term game. But if you're a long-term investor in the right stocks, you kill them every time because you're not playing their game. How do you do that with metals?
Yeah, you've got to. If you use the word game, right, you got to figure out what your own game is. And my speech is regulated, so I can't give investment advice. My advice is you don't need to have a great plan, but have a plan. You got to have some system, and buy and hold is as good a plan as many. The one other item, though, I just like to mention in the context of the current volatility, is most investors have a certain risk profile, and you can't easily quantify that standard deviation and all that stuff. It doesn't really make any sense. But one yardstick, especially for the retail investor, I think, is that if you get nervous about the holdings you have, if you can't sleep well at night because of the investments you
Yeah.
have, you might be overinvested. And the volatility that we see is, of course, quite elevated right now. I've been cautioning on the way up that yes, this volatility can also happen on the way down, right? Um, when something appreciates in value, we appreciate it, but let's keep in mind that that portion of the portfolio, if it outperforms other portions, is taking on a bigger share, right? And then if that is that, and if that portion is more volatile than the rest of the portfolio, it means your overall portfolio is more volatile. I think people need to be cognizant of that, and so and if that's more volatility that or more risk that people are comfortable with, it's all right to take some chips off the table, even if you think that ultimately those prices will go higher. Because if you have more risk than you can stomach, then you'll be selling at the wrong spot at the wrong time. And I may have mentioned this on
Story
your
of my
program.
investing life. Story of my investing life, Axel.
Yeah, yes. I mean, I think I mentioned on your program in the spring of 2009, people said, "Oh, you got to double down on stocks," and because people say that just about every day. But if you have lost, if you didn't rebalance on the way up, lost half of your net worth in the financial crisis, going even more into stocks, it's just an unprudent exposure. You got to take the prudent steps on the right time. Now, if you're somebody who has plenty of other income and whatnot, and happen to like precious metals, by all means, stay with it, right? I am not telling people that they have to sell out as the price is going up, but people do need to do a gut check and a health check that they're okay with the volatility that we have. And by the way, when retail sells at in when the market goes down, it's called retailers panicking. When professional investors do exactly the same thing, they do risk management, and so they want to sound smart because they get paid for what they do, but they are just as emotional animals as anybody else.
Yeah, that's why the best traders are unemotional, right? Maybe that's why algorithms are so good, because they're unemotional.
Yes.
So, all right. So, one piece of final advice as far as what's happening to metals prices right now. What do you tell people, just in general, no investment advice, but psychologically, how do you weather the storm?
Well, I mean, we're still substantially higher than just a few weeks ago, or even days ago, I suppose. The added volatility is in significant part due to the fact that speculators are back. And if you're old enough, and many gold investors are, you remember the speculators. They were absent for several years because there were SPACs, meme stocks, and other things. But in recent weeks, crypto hasn't done so well. Meme stocks aren't doing so great. The Max 7s are not doubling every week. But gold has been going higher, and this cohort of not so loyal investors has come back into the precious metals market. And so I would expect volatility to stick around for a while. And just one has to be cognizant of that, right? This is gold on silver investing is not a one-way street. You got to have a good stomach for it. And of course, it feels much better when it goes up in a straight line. But that's, as we can see as we talk, it's not happening every day.
As Benjamin Graham once said, the tree does not grow to the sky. And when you do see parabolic moves, then inevitably you're going to see a parabolic move downward when it goes up, and vice versa. Axel, where do we find you? How do we connect with you on the web? Best place.
Merkinvestments.com is the website. We have exchange traded products in physical gold. We do have a closed-end fund in the gold mining space. We haven't touched on that. I can't talk about the products here, but come to our website. We manage over $3 billion in gold mining. We have a free newsletter on that website, and then you can find me on social media at Axel Merk is my Twitter handle. And I can't talk specific stocks, but I will give plenty of opinions about what's happening in the market.
All right. Well, you know what they say about opinions. Axel, appreciate you coming on. Any questions, comments, shoot me an email, kl@kerrylutz.com. And make sure you visit the site, kerrylutz.com. That's the easiest place, financialsurvivalnetwork.com. It'll all take you to my Substack. That's the new home of FSN. A lot of you, thousands of you have found us there. Please keep visiting. Axel, we'll talk to you again soon. We won't let as much time go by again, I promise. Be well.
My pleasure.